Hey guys, and welcome to this week's live trading session. Today we're looking at the Euro Pound, and believe it or not, I'm actually looking to short this pair uh, on the basis that we have a ton of negative momentum in the background, and overall the market is just quite choppy for the longest while, and we're actually looking for a break of this pivot level over here. Now, I want to go on record saying that this is not the best trade setup. I'm going to go on record saying that because I'm literally selling into a ton of support over here, but obviously trading the overall momentum market. So you may hear my voice a little bit different to the other videos, and that's because it's 6 o'clock the morning over my side, and it's still very dark, and and my wife is still sleeping, so I haven't really gotten to speak to anyone today, except you guys. So yeah, I'm starting my day off just having a good chat with you guys. And yeah, so let's go ahead and have a look and see what's happening on this pound. Now, I've looked at the other pairs as well, and I'm sure that there could be potential opportunities on those pairs. But if we're looking at the pound particularly, the euro pound particularly, I actually see the market have the potential running it all the way to the monthly pivot, as we've been rejecting highs over here for the longest time. And that's mainly the reason why I'm looking to short this pair. And if we scale over into our lower time frames, we can actually start to see that the market has kind of just been hovering around here. Now, I'm kind of taking a chance, just kind of wanting to short this into a pivot level because this is the daily pivot. Um, Wanting to short this right through, and so I am kind of trading into support, and I'm mindful of that. But at the same time, I think it's just going to be a case of us putting a position on. Um, just to see how the trade is going to work out. So I'm not planning on putting in a full position, but much rather looking to get my foot in the door. And so what I'm going to do is I'm going to bring the account up and I'm going to show you guys the position that we're entering in. So instead of going with the usual full lots, I'm going to go in with a half a lot. So let me bring that over to you guys so you can see. We're going in with a half a lot, and we're looking to sell the euro pound. Let me go ahead and just get that off the. There you go. So you guys can see. Let me bring the account over. There you go. So you guys can see we executed the position, and we basically just running. Okay. It's just a case of waiting and seeing how this particular setup is gonna uh, um, develop. But in all honesty, I am looking for the market to run up just ever so slightly, perhaps to I'm looking at the market running to around 86.60, sorry, 89.60. If we can get the price running all the way up until there, it will be really cool. Kind of add on to the position. But if anything, I mean, it's all good that we kind of see the market just kind of just so that we have our foot in the door, type of thing. So yeah, I mean, guys, that is the first position of the day, and it's just a case of waiting and seeing if this is going to be playing out. So what I'll do is, I'm actually going to have a look at the other pairs, but I assume that we could potentially get another unit in, and this is one of these trades that can be over very quickly, and I just want to kind of place my stops in off screen, and as soon as I get that done and dusted, then I'll come back and then I'll give you some more commentary. Up until then, I'll just go ahead and press pause. Okay, guys, just back, and I got the stop set in place, I got the target set in place, and as you guys can see, unlike our other videos, my stop loss is a little bit bigger than what it usually is. Usually we're looking at a stop loss of between 15 and 20 pips, and here we have a stop loss size of 30 pips. And the reason my stop loss is the size is not because I had a feeling that it needed to be the size. There's actually a strategic reason behind stop loss placements. And so I found that I really wanted to kind of add value in these videos when we do these videos, and upload it, just so that you as the viewer is able to get something out of it beyond just watching me take a position. And so I thought it'd be best to just kind of add a bit of a mini lesson in these short videos as well, just so that you can take something away with you. And today I want to kind of talk about the importance of a stop loss and how do we actually place a stop loss? What's the mindset behind placing a stop loss? Now, before I talk about that, it's something one thing I want to address and kind of just put on record is the fact that your target should always be greater than your risk. You should always target more than you're risking. That is a positive risk to reward. Okay, never take out less than what you're risking. For example, just because we're on the pivot and we in a very, very, very small profit margin. I mean, if I bring the account over, you guys can see we up a whopping $11, or was up about $11. Um, doesn't mean that we close the position off and bank our profits. It means to say that what you want to do when you have a target is that your target should be equivalent to or greater than your stop loss. Okay, that is a very, very, very important principle. But be that as it may, that's not what I want to delve in today's mini lesson. What I want to delve in is stop loss placement, and more particularly, um, don't be scared to have a relatively size. Don't be scared to have a relatively big stop loss, obviously within reason. And there's a few things that you want to think about when you're placing your stop loss or selecting your stop loss. And you obviously select your stop loss in relation to your target. Okay. Now, as you guys can see, that we are on a pivot line over here. Now, I could easily assume that the market is going to break this pivot line and we're going to see profits immediately. And that's the idea. Okay. So there's a lot of factors that supports this idea, but I'm mindful that the market could easily use this pivot level as an opportunity to build momentum to the upside, thus taking me out on my stop loss. And I will ultimately have lost 30 pips. Now, granted, that is definitely a possibility, but it's not something that is going to keep me from placing a stop loss. You see, when we're placing a stop loss, you need to think of it like playing chess. When you play chess, your objective is to get to your opponent's king, just as much as your opponent's objective is to get to your king. And whoever's king is taken out first, that individual loses. So when it comes to the market's objective is to take you out on your stop loss. Your objective is is for the market to take you out on your take profit. So if you were to use that very analogy, the market's king is the market's king is the take profit. The moment the market takes you out on your take profit, you've won the trade. And the moment the market takes you out on your stop loss, you've lost the trade. And so ultimately, it's this analogy that I would like to kind of refine. Um, and so when you're placing your stop loss, you're placing your stop loss like you'd play the game of chess. You see, there's many different pieces in a game of chess that moves in all sorts of directions. And if you are very wise, you start to use strategic moves to protect your king at every cost. So it's either that you're going to play defensively, where you're going to use your other pieces to protect your king, and then gradually move forward to attacking your opponent's king, or you're playing the full on attack game, where you're using your pieces to go and attack your opponent's king to a point where you are breaking down their defenses. And so when we're looking at our stop loss placement, we're trying to place our stop loss outside of the reach of the market. We're playing a defensive game in the beginning. The moment the market runs into the green, then we're starting to play the attack game. Then we're starting to see the market running towards our target. And the objective should be something like this. You want to have as much barriers between your entry price and your stop loss as possible, because that would be the equivalent of playing a defensive game in chess, where you protect your king with as many pieces as you need to protect your king with, and allow the other pieces to play on the attack. So in this instance, I have these two moving averages protecting my stop loss. Notice that my stop loss is actually above this moving average over here and this moving average over here. And there's also a number of other factors that is protecting my stop loss on my off-screen charts. But ultimately, what I wanted to highlight is that the objective when placing your stop loss is to place it outside of the reach of the market. Okay, Now, bear in mind that there are a fair number of barriers that's reaching my target. So, kind of, this is a kind of 50-50% trade. There's a 50% chance of success and there's a 50% chance of failure. Granted that if we were to evaluate it from purely this standpoint, but like I said, that I have other factors that supports my bias on my charts off screen that suggests that I could have a just ever so slightly greater probability of success in this particular position. Now, the one barrier that the market has to break in order for it to see my target is this pivot line over here. The moment the market breaks this pivot line over here, I'm one step closer of being taken out on my take profit. And the next barrier will be this moving average over here. So notice that when you are placing a position, your objective should be to have as many barriers between your entry price and your stop loss, making it very hard for the market to actually take you out on your stop loss, and have little to no barriers between your target and your between your entry price and your take profit. And that is going to be what makes it a lot easier for you to kind of just run the market to your target. So this is where the phrase "the trend is your friend" comes in, because when you're trading with the overall trend of the market, it makes it easier for the price to just kind of hit your target, because there's not a lot of barriers keeping the market from getting there. Whereas if you are trading against the overall trend of the market, it's very easy for the market to reverse and take out these barriers that supports the opposite direction. So, like we said, if we go over into the daily time frame, you guys can see that like this trade has kind of been ranging. It's been range bound because we've been kind of testing these key high points over here for the longest time, and I'm assuming that after testing this for the second time, so if one, two, three, four touches on this key resistance level over here, beautiful shooting star that was closed yesterday. We have a very nice bearish candle opening today. And naturally, what we're assuming is that price is going to run all the way down to the pivot level at least. Now, if you were to swing this position and you're in the trade, we could even run it all the way to our daily moving average over here, our daily 50. And if the market gets to that point, that's a very, very nice position. But bear in mind, that will only be the case if we had two units in and I only have the one. So as it stands, guys, I really hope that this makes sense. I hope that this example that I've explained to you uh, ties in with just understanding the mindset behind placing a stop loss and the importance of it. Um, you see, we're not trying to avoid losses, we're simply just trying to prepare for them. And the way we prepare for our losses is we always aim to take out more than what we're risking, so that when we take our next position, and it doesn't work out, we have already been protected by the position that we've won. So in other words, here I'm targeting 44 pips, I'm risking 30 pips, and when I take another trade, I'm most probably just going to be risking 20 pips or 15 pips, and that will mean that I'm going to risk 20 pips or 15 pips on the 44 pips that I've just made in terms of profit. And that's to say that if we make a profit in today's live trading video, but for the most part, I hope that you understand the concept. For now, that was a bit of a mouthful. I'm going to take a break. I'm going to press pause and I'll come back as soon as we have something more to report. Okay, guys, just back, and I actually want the market to kind of test this high again, and that's going to be where I look to kind of add onto this position. Bear in mind that with regard to this particular setup, I am not necessarily looking to kind of go all out, but I do see the potential of the market kind of running further to the downside. And I would like to see the market kind of moving a little bit further up, perhaps even testing this moving average over here. But in the interim, I'm just going to kind of hold on to the position. I wanted to, like I said, add a trade um, at another position when the market was up over there, because I got a very, very nice signal setup on my charts of screen. But as you guys can see, we're up about $20 now. So it's a slow morning. It's a slow morning, but definitely part and parcel of the journey. So I think if the market doesn't come back up to that point, currently we're just below the pivot line over here, which is a good sign. Like we said, it's breaking its first barrier. And I think if we can just kind of get the market to pull back ever so slightly around this region over here, I can potentially add on to the position. But if not, then it's just a case of accepting that we have one unit in, and with that one unit, we can obviously see the overall trade through. So for now, I'll just go ahead and press pause, and I'll come back with some more commentary as it relates to the development of this trade. Okay, guys, just back, and looks like we actually had quite a aggressive spike to the upside. Currently swimming in the red. I'll bring the account out in just a second, and you guys can see that after the price kind of was running below the pivot level, we came and tested our barrier over here, like we spoke about earlier, and price then decided to actually use this as a very strong support level to push the value all the way back up. So as it stands, we about 97, $98 in the red, which is not that bad. Bear in mind that we took a smaller position on the basis that we didn't have the key setup that we were looking for. But um, all things considered, I mean, if we look at the overall structure of this particular market, there is still a chance that we could see price coming further to the downside. However, it might take a bit longer than we used to. Bear in mind that we kind of hit a load of support over here, and like I said earlier, um, we were definitely taking a chance trading into support. But in terms of such a lot of factors that supported the move to the upside, um, indicated that we should have gone short, which I wouldn't change. I wouldn't trade it any differently. It's just a case of waiting and seeing. And this is also why we had our stop set the way we did it, because if we look very carefully, we can actually see that now our first barrier was broken in the form of this moving average over here. We had a break of that moving average, and now in order for the market to take us out of our stop loss, it will have to break this barrier over here in the form of this moving average. So that is what I mean when I say we need to have these barriers between our entry price and our stop loss price, because that's going to be what ultimately protects our trade in and of itself. But as it stands, guys, I think we could get stopped out today. And it's still quite early. It's about 9:15 in the morning on my side. And so there might be a chance to get another position in. But as it stands, I think we are going to get stopped out today, which is absolutely fine. I think it's just a case of allowing the market to do what it needs to do, and then just reevaluating and seeing if there's another opportunity. If not, then I will call that a losing day. But that is only up until we get stopped out. Obviously, I'm not going to be just closing the position. And then also I will be look if we don't have any other positions and I get stopped out, then we'll call it the losing day. But as it stands, we're still in the race. We're still running this trade, and we'll just have to wait and see how it's going to play out. For now, let me just go ahead and press pause. Okay, guys, just back, and looks like we kind of in between a rock and a hard place over here, because at the moment price is in the process of breaking our final barrier in the form of this moving average over here, and we're not so far from getting stopped out. Let me go ahead and bring the account up so that you guys can see what we're working with. So currently $170 down, and the question is, can this trade be salvaged now? Bear in mind, guys, that there's nothing that really changed in terms of the background analysis. There's still the potential of the market kind of wanting to run to the downside, and this could be a very aggressive pullback. But we can't ignore the fact that the first pivot level was definitely a very strong influence on the way the market ran further to the upside. And if I look at the size of this candle, I mean, it's going to be very difficult for the market to form an equally impressive bearish candle in the direction that we've anticipated. So there's a greater chance of actually getting stopped out after the market has broken the first barrier and is currently kind of hovering on the second barrier, and it's only 20 minutes into the first hour, so there's still a very high possibility, or probability I should say, that we could break this moving average over here, considering there's still a lot of development on this particular candle. This candle could be one of those instances where we have a peak to the upside, just dips, and tests outside of this barrier and comes and closes back inside of it. That's going to be that could be one of the possibilities. Alternatively, we could see the market do a complete reversal and run further to the upside. But bear in mind that this has been a choppy market, and so I was very, very aware that this could be a possible play out. And we did, in fact, get the market to break the pivot, but we didn't get the market to break this moving average over here, which was definitely a result of this, resulted in the market kind of giving us a complete reversal. But the trade is not over yet. We're still in this position. There's been instances where I've been 2 3 pips from getting stopped out, and the market kind of just rolls over into my favor. Just as much as I've been 2 3 pips for just being hit on my target, and the market literally just reversed and took me out on my stop loss if I haven't already moved to break even. So, like I mean, they still they'd be still in this position. It's heavily weighted to getting stopped out, of course, based on the current price action, but the overall analysis still stands. So it's just a case of waiting and seeing how this particular candle is going to close and how the market is actually going to interpret this particular price action. So yeah, like we said, guys, I actually brought this account up because I thought we were gonna get stopped up, but it looks like it's gonna take a while. So I'll just go ahead and press pause and come back as soon as we have some more price action and some more development on this particular trade. For now, let me just go ahead and press pause. Okay, guys. So it looks like we actually rejected this moving average over here, and price actually formed a very nice shooting star, in fact. So let me go ahead and bring the account up so that you guys can see. Previously, we were almost $200 in the red, and now we're only kind of 120 around that region over there. Now, the question that we're faced with is, will the market or does the market have the capacity to still continue going further up? Absolutely, there's nothing keeping this market from actually continuing gradually to the upside. Just because the market rejected this particular moving average at that time doesn't necessarily imply that we're out of the woods just yet. I think the only time we'll be out of the woods if we get a confirmed uh, direction in terms of this moving average kind of pointing the downside, as well as this green one over here coming also and pointing the downside. But I think it's just a case of waiting and seeing how this particular trade is going to play out. And I had a look at the other pairs, and I find that today's market is quite funny. It's quite funny in the sense that a lot of the moves that happened yesterday, and it's kind of far into its trend already. So to try to catch the low of the market or try to predict the reversal is going to be quite difficult because the market could want to kind of extend a little bit more, or the market could easily just want to reverse. So I think it's just a case of letting the market kind of reveal its hand before doing anything. But as it stands, like I said, we're still in this particular position. And we're going to obviously wait and see how it plays out. For now, I'll just go ahead and press pause. I have some other work that I'm busy with. Um, so that's keeping me busy on the side while I just allow this trade to play itself out. For now, let me press pause and I'll come back to you guys as soon as we have something to report. Okay, guys, just back, and looks like this market has made a very interesting move over here. Currently moving a lot closer to our entry price than it was when it was all the way on top over here. So let me bring the account up so that I can show you guys that we were at one stage almost $200 in the red, and now we only $72 in the red. And this is obviously a good sign, but we're still not out of the woods just yet. Like I said, I would need to see this moving average kind of give me a very sharp turn to the downside, as well as this moving average over here starting to kind of roll over a little bit. And also, I'd like to see this particular candle actually break this moving average to the downside, because at the moment this is actually supporting the price to the upside. So if we can kind of just see the market breaking further to the downside, then we kind of in the clear, almost in the clear, to say the least. But we will definitely know that we're in the clear once we have a successful break of this pivot level over here, and this key moving average over here. But for the most part, I mean, this is a prime example of why we place our stop losses the way we do. Because can you imagine what a shame it would have been to literally just get tagged out, only to see the market actually potentially making its way down further to our target. So we're still in the position, we're still holding on. It's just a case of waiting and seeing how this entire move is going to be playing out. So far, very interesting trade of the day, and we're just going to have to wait and see how things work. For now, let me go ahead and press pause. As you guys can see, we actually came all the way back into the green, in fact breaking the pivot level to a point where the market is currently just hovering around this moving average over here. So if we break this moving average, then all cards off the table, and we could potentially see a our target hit today. So let me go ahead and bring the account up so that you guys can see where we are at. And again, from being all the way down from about $200, we're up about $55. And it might not seem like much, but I mean, if you look at how close we were to getting stopped out to how the market has kind of rolled over, it's just a testament to, highlight what we discussed earlier this morning, where we spoke about, putting your stop loss in such a way, or placing your stop loss in such a way where it's protected by various forms of barriers. And as you guys can see, that was a very, very good example of it, ironically. And so now it's just a case of seeing how this trade is going to play out. So the question is, are we out of the woods yet? As it stands, I think we in a lot of we as it stands in terms of a position, we in a lot better a position than we were earlier this morning when we were all the way up over in the red. But we're still not in the clear. I think the only time you can actually confirm that you're in the clear is when the market actually takes you out on your target. But for the most part, I think it's just a case of waiting and seeing how things are going to play out. And I think if we go over into the daily time frame, we can actually see that the shooting star that we had on this key resistance level over here is also starting to have a major impact on the overall direction of the market, and we could see a nice run to the downside. So, like I said, I'm parking this position off at the daily at the pivot level over here found on the daily time frame, but um, it's not to say that we can't go any further down. So this is obviously for today's live trade. And also, like I said, if we could have gotten two extra positions in, then we could have actually run our second position all the way down to our daily 50, which is all the way over here. We did only get one half a position in, and I think that is good enough for us to actually see the progression of the overall position as a whole, and also just to see that key lesson that we discussed earlier this morning kind of playing out. And as you can see, we're kind of moving quite nicely further to the downside, and we have about still about, I'd say, 45 minutes to the hour closing, and up until that point, I think it's just a case of waiting and seeing. So if we can have a nice solid bearish candle over here, then we could see the price running down all the way to the target level. But other than that, guys, I think this was a very good trade, a very good lesson. I think it was timely as well, considering that it played out quite nicely. And I think I'm just going to go ahead and press pause, and we'll come back as soon as we have something more to report. Okay, guys, just back, and looks like we did have a successful break of this moving average over here. And now it's just a case of waiting and seeing how things are going to develop any further. But let me go ahead and get the account drawn up for you guys so that you can see. We're running about $100 in the green, and I think it's just a case of waiting and seeing how things are going to be playing out. But I really do think that this particular trade this morning gave us a lot to think about, and it also gave us a lot um, in terms of the mini lesson, and kind of showed us how uh, that kind of plays out when you have various barriers between your entry price and your stop loss, and how it basically protects your trade as a whole. But as it stands, guys, I mean, today was a relatively good day. So far, I talk as if the trade is finished, but like I always say, um, we can only confirm a victory if the trade takes us out on our profit target. So we're just gonna have to wait and see. The question: can the market still reverse and come all the way back up? That is always a case. That is always something that is on the cards. It's just a case of waiting and seeing what option the market wants to select. Bear in mind that at the moment, the path of least resistance is to, in fact, drop further down, considering that we now have the daily shooting star that we see over here kind of starting to play out as well, and the price possibly wanting to test this monthly pivot. And a break below this pivot will definitely see us run to at least this moving average over here. So a very good day so far. Let's go ahead and press pause and come back as soon as there is something more to report. Hey guys, just back, and looks like we had quite a nice move to the downside after breaking this moving average over here. Price is starting to really show its hand at the moment, and it's fairly close to its daily. See, it's fairly close to the pivot level over here that we're identifying. And one of the things that I'm actually seeing on my charts of screen is that there is the potential of the market wanting to potentially reverse. So what I'm going to do in this time is I'm actually going to, let me bring the account over. You guys can see. So we're running about $200 in the green, and I'm actually going to go ahead and move to break even. Um, and that's going to ensure that all risk is off the table. So that is the price, and we officially move to break even. And so that if the market does decide, in fact, wants to reverse all the way up, then obviously we don't make anything, but we also don't lose anything. But considering the fact that the market had this very nice run to the downside, we were about five, just missed our TP but about 5 pips. And we have 10 minutes to the hour. So what I'll do now is I'll just go ahead and wait for this to kind of play out, because as it stands, we had quite a nice move to the downside. So the temptation is definitely there to kind of just close the position off, considering we're so close to the target. But one of the key things that you want to remember is that when it comes to your positions, you want to see it through. You don't want necessarily want to close it off just here and kind of leave this remainder off the table, because the overall analysis suggests that the market has the capacity of kind of running further to the downside. So it's just a case of waiting. We have the finish line in sight. So we just have to kind of endure. We move to break even. All risk is off the table. So we can't lose on this position, but we can still definitely take out nothing at the same time. But be that as it may, guys, I think that this was an awesome day of trading. I think that the lessons that we've learned um, in today's session was invaluable, to say the least. And I think it's just a case of waiting and seeing how the trade is going to kind of close the day off. So for now, I'll just go ahead and press pause, and I'll come back as soon as we have something more to report. Hey guys, just back, and looks like we're kind of having a bit of a pullback here. And the question is now, can the market actually pull all the way up? That is usually the question I'm faced with. But yeah, we had a bit of a pull down after we closed the call, after we put on pause. And then we were about 4 pips away from our target, and then we had a bit of this pullback over here. So I'm just giving you a bit of feedback with regards to what's currently happening. Up until then, I'll just go ahead and press pause. I just wanted to show you guys that there are times when the market gets somewhat close to our target and then just decides to pull back. So it's just a case of enduring, waiting and seeing, and sticking to the plan. Okay, guys, just back, and looks like we came all the way back down to these lows over here. And basically, we're gonna have to see if this is going to be the candle that's going to kind of run us all the way through to our take profit. So in the meantime, let me go ahead and get my account drawn up. You guys can see that currently we're running at around 250 dollars profit, and I think it's just a case of waiting and seeing. Like I said, there's instances where the market gets so close to your target and then kind of pulls back again, and ultimately just kind of reverses all the way. And as you guys can see over here, we just broke this low over here, testing lower, and that was about 5 pips from our target, and then the market went all the way back up, and fortunately it kind of decided that it wants to continue with the overall direction, which we see over here. Slight bit of a pullback, and if I look at it, I mean, this is literally just a cat's whiskers, or a cat's whisker away from us, literally by less than 2 pips, about just on 2 pips it was from our top up from our target. um and I just think it's a case of waiting and seeing. So there's there's these instances where you find yourself so close and you kind of just want to close the trade, but I really do want to model what it means to kind of see a trade through for you guys. And it's just a case of practicing good habits. There's many instances where taking out a position when it's so close to your target is not necessarily a bad thing, but don't let it become a habit. Don't let it become something that you do on a regular basis out of fear. The moment you remove a position that is in profit out of fear, then you've basically defeated the entire purpose, and you've neglected all of the analysis that you've done, all of the time that you've spent waiting on the trade. Because what usually happens is that when you take the position out, and let's say over here, eventually the market does make its way down to your target. If you have an edge in the market, but in this instance, I think it's just a case of waiting and seeing how this particular market is going to respond to our position. So I think I'm just going to give it some more time. I don't want to keep you guys too long on this trade specifically, purely because of the fact that I don't want the video to get boring. But I would look it would be really cool to see this market kind of just splash the downside, and we can all see the market taking us on the profit target together. But be that as it may, like I said, we moved to break even, and I mean, if anything, if I was more concerned, we could have possibly secure. I don't even think we can secure 1% because it's in this candle over here. So I just think let me get that target back where it was 0.8909. There we go. So we're not too far from it. It's just a case of practicing the patience and waiting and seeing. So, yeah, let me go ahead and press pause. And if we get close to getting taken out on our target, then I will come back to the recording. And if not, I think if because I'm actually busy with a few things um, outside, just sorting out a few things there, doing some work, some household work. While this trade is running in the background, so I might be busy there. But when I come back, and if the market has taken us out, then I'll just take a screenshot and share that with you guys. But if anything, and if I have a complete reversal, then that's obviously also something that we're going to be documenting. So it's just a case of waiting and seeing how this particular run is going to end. But for now, let me just go ahead and press pause. Hey guys, just back, and looks like we're doing a little bit of a reversal here. You can see that we were literally like 1 or 2 pips shy from getting taken out on our target, and we just had this massive tail forming over here. And I think this is just one of those prime examples of what happens when you kind of stick to the trade, and then it kind of just has the potential of doing a complete reversal. Now, I'm not saying that this is going to be the case, but this is one of those opportunities that I'm so glad it's on a recording, because you guys can see what trading is really about, the good, the bad, and the ugly. And obviously this is just part and parcel of the journey. This is just part and parcel of the process. But being able to identify a position and seeing the position through is not always as simple as a lot of these guys that claims to make these ridiculous returns, the way these a lot of these guys make it out to be. Trading is filled with challenges in and of itself, and this being one of them. And it takes a while for you to develop the discipline, to a point where you'll be able to accept the outcome regardless of what it might be. Now, bear in mind, I'm fully aware that this market could easily just turn all the way back and take me out on a break even, and we would have taken a trade that we started this morning at around 6 o'clock, and it's almost 5 o'clock in the afternoon. And so this was a long trade that we sat through, and for this market to kind of reverse all the way back, taking us out for nothing, it will definitely be a shame. But the same, you have to ask the same question: what happens if the market had just gone through your take profit? Then it wasn't going to be a shame. And so, just as much as the market was 2 or 3 pips from my target, um, if I'd waited, the next candle could easily have been the candle that kind of pushes further to the downside. And no one really knows what is going to happen. Even at this point of the year, we have this very strong reversal candle potentially forming with 12 minutes left to the hour. And this could easily be the candle that nips us out and then reverses. And this could easily be the next candle opening and just smashing through the downside. We don't know what's going to happen. What we do know, however, is that there is a plan and there is a process that we have to follow in order to ensure that the trade is facilitated and it's seen through. Because you see what we did earlier today was we planned the trade, and now we're just simply trading the plan. And it's just one of those things. I think it's really really um, good that we got this on the recording, because you guys can see that trading is a lot more than just placing a position and seeing the market run carelessly in your direction. There's a lot of things that you need to take into consideration. There's a lot of things that you need to be mindful of when it comes to trading. And that in and of itself is what a lot of these guys that claims to teach you these ridiculous returns, or claim to give you these ridiculous returns, be it in the signal group or whatever the case may be. They don't teach these things. They don't show you this side of trading. And that is why I'm so happy that this particular trade gives us an opportunity to see the market in, you know, in everything, in its good, in its bad, and in its ugly. And so I just wanted to leave that with you guys. We're still in the position. Let me get the account thrown up for you. We're still running in this position. So we were running quite nicely earlier, and we kind of just pulling back a little bit now. Is this a retracement? I'm not too sure at this point in time. I think it's just a case of waiting and seeing how this particular setup is going to work. But for the most part, guys, I think I'm really really happy that we could capture a move like this on the recording. It's my first on these live recordings that we get a trade like this, and that's why I'm so happy that we were able to capture it. For the most part, let me go ahead and press pause, and we'll come back, and hopefully we could get our next candle being a very strong bearish candle, smashing it all the way through to the downside. But if not, we accept it. There's a ton of lessons that we learned today alone, and I think that in and of itself is um, valuable. It's invaluable, in fact. With this trade, we might get a couple of dollars in the account, but with the lessons that we were able to learn and record, I mean, that's invaluable. And I'm so glad I could share those lessons with you guys. But for now, let me stop going off on a rant and just go ahead and press pause, and I'll be back with some more information as this market develops further. Hey guys, just back. So we had a very, very strong bullish close of this particular candle over here, coming all the way back to test this moving average as dynamic resistance. Now, what I want to do is I want to get the account drawn up, and you guys can see we had quite a turn from about $250 all the way to 70. Quite a turn, quite an aggressive turn. But be that as it may, we're just gonna have to wait and see how does the market respond to these uh, barriers now. Because remember what we said, we want our stop losses to be protected by these barriers. And I for these you can use many different things. I use indicators like the moving averages and some other indicators that I use on my other charts. But for the most part, I mean, I have the pivot coming in to protect the my entries all the way up over here. So I have the pivot protecting my stop loss. I'll have this moving average over here protecting my stop loss. Gradually, we see the 50-period moving average starting to point to the downside, and this is a much larger moving average. So it's going to take a while for this one to kind of you know turn over to the downside. But all in all, guys, what I'm trying to show you is that when we spoke this morning, we spoke particularly about um, when you're trading, trade with the idea of playing chess, and protect your king as by any means necessary. And as the market moved into the direction that we've anticipated, in doing so, it's also kind of buffed up and kind of uh, cause more barriers to surround our stop loss. Now, this is not to say that the price can't just easily break through this barrier over here and this barrier over here, this barrier being the moving average, this barrier over here being the pivot. It's not to say that the price can't easily just break through it, test it, and then come all the way back down. That's not what I'm saying. What I'm saying is that when you're placing these positions, it's so important to be mindful um, of all of these things. Take these things into consideration as you place your positions, and uh, when you do that, you kind of protect the trade, and it kind of increases the probability of success. This is one of those particular trades that we've I've recorded a few of my trades so far, and there's been times where within the first hour, we get one candle that takes us into the position, and that same candle takes us out of the position on our take profit. And in these instances where we had spent some time on a particular position and we just saw the market hovering, eventually taking us out on our stop loss. And this is one of those rare occasions where we have been so close to getting taken out on our take profit, only for the market to reverse all the way and potentially take us out on our break even, where we will have made nothing and we will have lost nothing. And this is the part of trading again that I want to show you guys. I want you guys to see that this is the real part of trading. And if you're really serious about taking this as a career, or you're really serious or if you're really serious about developing the skills needed to become a trader, these are things that you're going to have to be able to endure. These are things that you're going to have to be able to deal with, because at the moment we were up about $250, and now we up just under 70. In fact, we're about 60, almost just, 60 $70 we up now. And that's a massive turnaround. And the easiest thing to think of is that one could say, if only I could have just closed it there. And that's the common thing. But the problem is, yes, we could have closed it there, but we could have waited and the market could still have come and take us out on our target. Nobody knew that this was going to happen, but it happened. And so this is something we have to accept. When we made the decision to see the trade through, that's something we had to accept. And so we see a lot of movement at the moment, and it's just a case of waiting and seeing how this particular trade is going to play itself out. Um, this candle opened about, this is going to be the first 5 minutes in this candle's development. And the question is, what's going to happen? We don't know. And that's just the part of trading that I want to show you guys. So this video is going to be a lot longer than I thought it was going to. Well, this morning when we took the position, I thought honestly that this is going to be one of those quick trades, because we've been getting a lot of those quick trades in our Tuesday live tradings. But this is definitely one for the books, because we saw the best of it. Sorry, we saw the worst of it as the market went close to taking us out. And then we saw the best of it when the market was close to taking us out on our take profit. And now we're kind of seeing the most, which could be interpreted as the most frustrating part of trading, where you're so close to closing a position and then it kind of does the full on reversal. And so this video is going to be a lot longer than I prepared it to be. Obviously, I don't have any control over the markets, but with that being said, guys, I do want to apologize again for the fact that if this video is sent out a day late, you now know why. Because obviously I still have to put everything together and then upload it, and that's also going to be quite time consuming. But be that as it may, I'm definitely going to be getting this trade out sent to you guys, be it tomorrow morning or be it late this evening. You guys are going to get this video. But in order for you to get it, we first need to see how the market is going to respond to our current price actions. For now, let me go ahead and press pause, and I'll come back as soon as we have something more to report. Okay, guys, just back, and it looks like we're currently testing this pivot level over here. Um, Kind of testing it to the T actually. Now we're just gonna have to wait and see what's gonna come of this. I see that we have 3 more minutes to the hour, the end of the hour, and this is definitely a very, very long position, if I might say so myself, considering that we were so close to getting taken out on our target. But be that as it may, we now tested the pivot level. We haven't yet officially broken this moving average over here, nor have we officially broken the pivot. But based on the overall momentum, we still have, believe it or not, we still have negative momentum in the background, and this could easily be a bit of a retracement. Um, Now, I'm not saying that to cushion the blow of potentially having a complete reversal, but this is definitely the case. If I look at my other charts on screen, we still have negative momentum in the background, and the overall market is still poised for the downside. Coming to test this pivot, we broke it, we came to retest it, and depending on how this particular candle forms, we could see the market kind of rolling over from here. That's to say, if we get a very strong bearish candle following this particular setup. But all in all, I mean, there's those instances where the market could easily come up, just nip you out on your stop loss, and then kind of roll over. Now, bear in mind, we have moved to break even on this trade, and I would not do it any other way. I think when we moved so far down, and this candle was in the process of forming, we then moved to break even, which I will hold on to that. purely because of the fact that, I mean, if the market does in fact want to go further up, then it's just going to make this trade less appealing to me, if I was to say the least. So let me go ahead and draw the account up. You guys can see that we about $35 in the green, coming from 250. Okay. So yeah, I think it's just a case of waiting for this candle. This candle could be the deciding factor. This candle could be the candle that could be the peak high, which results in the rollover, or this candle could be the catalyst in terms of kind of just shifting this particular candle forming over here further to the upside. So we're gonna have to wait and see. So we did have a break of this moving average over here, possible pullback to the moving average, and potentially just run up further to take us out. I don't know. We're gonna have to wait and see. So a lot has been we've had a lot of things happening in one particular position. And bear in mind, guys, this is a half a trade. We weren't even sure about this trade in the beginning, but it just goes to show that you can never actually guarantee anything. You can be very close to taking your profit, and you can be very close to taking your profit. And the market can reverse just as much as you can be very close to being stopped out, and the market can reverse. So there's if this ends into a break even, we will have had an opportunity. We will have seen the market close enough uh, we would have seen the market get close enough to stop us out, and we would have seen the market get close enough to take us on our target. And if the market was to go on a break even, then yes, we would not have won anything. We would not have lost anything, but it just goes to show that this is what the markets are about, and just being able to identify these key market opportunities, taking the position, not knowing what's going to happen, but just sticking to your plan. uh, I do want to say that this video is a lot longer than I thought it was going to be. I thought that when we took it this morning at 6, it was just going to be one of those things that by the end of the morning we would be done, wrapped up, uh, done, finished, edited, sent out, uploaded, and you guys will be able to have enjoyed it. But it looks like there is a chance that we're going to be uploading this video a bit later tonight, possibly having it uploaded tomorrow morning. But just that, be rest assured that you guys will be getting this video. For now, let me just go ahead and press. Sorry, that was just my account reloading. But yeah, let me go ahead and get this thing set to pause, and then we'll come back as soon as we have some more development. Hey guys, just back, and finally this trade is over. Unfortunately, it took a break even, and as you guys can see, the market is currently running a little bit further up. There's a bit of positive momentum creeping into the background, but let me go ahead and get the screenshot of this position. Um, and then you guys will be able to see that we closed today's position off at $0. We executed this position about 7 o'clock this morning. I was under the impression it was at 6. 7 o'clock this morning, we executed the position. Took the entire day to kind of develop this entire run, but such a lot of lessons that we were able to extract from today's live trade. And so at the end of the day, when you take a position like this, and you're so close to getting taken out on your profit, and you get so close to getting taken out on your stop loss, um, there can be a heap of emotions usually. And what I usually like to do is the following. I like to remind myself that the lesson that I learned out of this particular trade was far greater than the amount of money I would have received from it. Let me explain why. Because at the moment, there's a habit that I've now just reinforced. And the habit that I've reinforced was that you need to stick to your plan. Because there's going to come a time where your target is going to be a lot greater than 45 pips. And you're going to have to see that trade through. You're going to have to stick to your plan regardless of the outcome. And one of the things that does, it allows you to develop a discipline when it comes to your trading. And it really does remove the fear component or the frustration or any of those negative emotions, it has a tendency to keep you from achieving true consistency. Understand that trading is 90% psychological and only 10% skill. Now, bear in mind that it was the skill that allowed us to get into the position, but it was the psychology that allowed us to see the entire trade through. And to say the least, I mean, yes, we were about 2, 3 pips from reaching the target, but how different would that have been from any other position that we've made a profitable trade on? How different would it have been if the market had taken us out on our stop loss on every other trade that we've perhaps lost on? Essentially, this is one trade in a batch of trades that we're going to be staking still for the rest of the year and for the rest of my career. So it's so important to understand what this particular trade means in that context, that this is just one trade. It doesn't set me back. It hasn't pushed me forward in terms of a monetary aspect. But what it has done, has catapulted my development into in terms of my mental discipline, and this is something that I will see as greater value than seeing a winning trade, just as much as it will be of greater value to have added this to you guys, to show you guys how trading is and how invaluable these lessons are. Because the thing is, tomorrow I will most probably find another position. Probability will be in my favor, and chances are we could take a positive trade tomorrow. Just as much as that same could be said that we could take a negative trade tomorrow. But those are just 1 or 2 trades in a batch of thousands upon thousands of trades that we're still going to be taking for the rest of this year. And so it's so important to look at it from that context. So, guys, I really do hope that you find value in today's session. And I really do hope that you were able to understand the concept that we're trying to communicate. Because as you guys can see, that this was one of those rare occasions where we could have multiple mini lessons in one particular trade, where the market allowed us to learn all of these invaluable lessons as it relates to our psychological development, the traders, the mindset development, and the mental discipline needed to attain consistency. So, guys, with all that being said, I know that this video is going to be quite long. I know that this video has been sent out a bit later than what it usually is sent out, but the only reason for that is because there was just too much information to kind of pack into it, and we were not willing to forego the value that we got from this particular trade. So, guys, with all that being said, I do want to say thank you for watching it all the way through. I do want to say thank you for taking the time to learn these lessons, and I do hope that you're able to apply it in your own personal journey. For the most part, if you do like the content that we're creating, please consider subscribing if you haven't already subscribed. And if you like what we discussed today, please feel free to leave a thumbs up. And if you know of anyone that may find the discussion that we had today valuable, then consider sharing this video with your friends. Furthermore, have an awesome evening further. Have a brilliant week ahead. I look forward to chatting to you all soon. Up until that point, cheers and bye for now.